Hello everybody, my name is Vartzis. I'm a ship finance partner at Stephenson, Harwood in Piraeus. Thank you very much, Nicholas, for the invitation, moderating this interesting panel. I'm conscious that we should spend some time receiving questions from the audience in respect of Poseidon principle and how this is being applied to ship finance documentation. But the objective of today's panel discussion is to explore the status of international ship financing. We do have a panel of distinguished banks representatives, international and Greek, so we're very likely to get some input and insight in respect of how they approach shipping nowadays. Starting our discussion, I would like to highlight and make an assertion really, which is a commonplace, that banking and ship finance landscape has fundamentally changed over the last decade since the turmoil in the global financial markets and the shipping crisis. The challenges in international ship financing and shipping market includes the exit of certain key players in the shipping banking sector, and at the same time the scaling down of the shipping activities of some other banking financial institutions. Also, we have seen the emergence of alternative means of financing, something which will be explored further on through another panel. And also, Poseidon principle being an illustration of that, it seems that banking and shipping becomes much more professionalized and regulated, which of course does have an impact on the banking and ship finance sector. The effect of all these aspects is that there has been a slowdown of the traditional banking. However, in this context, there are certain banks which are still active, and some of them have shown some increased appetite for ship finance. I have the privilege of moderating a panel comprising of distinguished members of the ship banking sector, and I would like to invite each one of them in this context to present themselves and then continue with our discussion here. Eleni, would like to start, please.
Thank you. First of all, I'd like to thank you both for having us here. Okay, so first of all, I'd like to thank the hosts for inviting us here in Cyprus for this prestigious event. My name is Eleni Vrettou. I'm the Executive General Manager for Piraeus Bank in Greece, heading all corporate and investment banking practice for the bank.
Hello, my name is Katerina Eleftheriou. I'm heading the Greek shipping portfolio for HSBC Bank. I'm very delighted to be here. Nicholas, thank you very much.
Good afternoon, my name is Iraklis. I'm heading the shipping finance business at Amsterdam Trade Bank since July 16, since basically the bank started shipping finance, and I'm delighted to be here with you today.
Hello, my name is George Arcadis. I am heading the ABN AMRO office in Greece since 2010.
Hello, and thank you to Capital Link for the kind invitation. My name is Passchier Veefkind with D&B Bank. I head up our Greek shipping business out of Athens.
Thank you very much, everybody. I would like to extend the first question to George Arcadis, representing ABN AMRO. George, how do you see the traditional banking lending nowadays? What are the main aspects of traditional banking and how these have changed over the last years, based on your experience in your institution as well?
Thank you, Christos. I think you mentioned before about regulation. Regulation is for banks has increased very much, especially after the subprime crisis in 2008. As a result of that, the compliance desks of each bank have become very important. They are important for our business, and they are also extremely powerful. In some cases, the head of compliance reports directly to the CEO, just to give you an idea of how strong they are. Over and above, the risk rating models of the banks have changed very much in the last 5-6 years. And so is the way that we calculate the risk-weighted assets, the RWAs. And following that development, the new models that have been introduced, risk rating models, are favoring lending to companies that are actually large. They have sizable and if possible diversified fleets. They have a diverse revenue profile, more stable, and they have also have a proper corporate governance vis-à-vis the smaller companies. While I do appreciate that there are a lot of medium to small-sized companies that meet the criteria. Then there is sustainability, which is here to stay, and I think this is very positive. We heard earlier from Alexandros the Poseidon principles, and I feel that in the coming years, the banks will be assisting more those companies that contribute to the sustainability agenda. And I also feel that there is also a last development, and that has to do with capital, which is limited compared to how it was 15 years ago. So, to answer the question, the nature of our business has not changed. We still aim to lend money to those companies that have the capacity and the financial means to pay us back. But all this has become a very time-consuming and difficult process.
Thank you very much, George. Continue with your last statement that you are in business, all ship finance banks are in business to extend loans and make money out of this. And since we have representatives of the shipping market here, what are the minimum required criteria, typical client profile that a bank would approach or would accept to be approached in order to consider extending a loan? I would like to get the insight from Katerina first.
So for HSBC, who is active during the last 4 decades and has built a Greek ship lending book of 2.8 billion, and it is split among 60 groups from small family-owned companies to very large private and few public ones. We have been conservative traditionally in our policies. We have rigorous selection criteria. We mainly focus on the character, the reputation and the relationship we build with the principals. We do look for a clean credit track record and successful operational performance. We do bank the owners who are committed to the sector and who are here to stay for the long run, who are highly liquid and willing to support their business when things go south. Fortunately, we are flexible enough in regards to company size, so this makes us relevant to almost the entire spectrum of the local community, excluding overaged fleets. And although we do welcome the corporate structure and the audited consolidated financial statements, the industry, as George said, moves towards this direction, but I cannot say that their absence is a no-go for clients whom we know well and we bank for many years.
Thank you, Katerina. Passchier, you are the new head of DNB in Athens. What's DNB's perspective in this regard?
Well, I would echo also what Katerina said before. I think for us, the key driver in looking at our Greek shipping portfolio is the relationship. We've been in this business for, in some cases, over half a century with certain names. So relationship is extremely important and will continue to be important in us supporting certain clients. In addition, I would say, worldwide, we have really refocused our global portfolio around 100 blue chip names. That is a bit of a decrease from where we were a number of years ago, but I think the reason for doing that is to focus, and it sounds very logical, but to focus more and more on profitability. I think more often than not in the past what we've seen is that profitability has been an issue, and that's also the reason why a lot of traditional shipping banks have exited the space. For us, profitability has gone hand in hand with building our investment banking platform. We've spent the last decade investing significantly in building up our investment banking platform. Luckily for us, that has coincided with the rise, if you will, of the Norwegian high-yield bond market. So yeah, we really have focused on developing those capabilities and products as well. And just to give you an example, moving away from the lending business per se, in the last 12 months, we've closed and arranged $13 billion in shipping loans in total, 3.5 billion of which on our balance sheets, but importantly also 2.5 billion we've arranged through the capital markets. So again, I think an important diversification. And then if you ask me, what kind of clients do you focus on these days? The answer would be the clients that allow us to really, offer our full product suites, and it can be ECA financing, it can be capital markets, it can be commodity hedges. A lot of focus last year, I think, on some of the hedges that we saw out to lock in the spread, high sulfur versus low sulfur. So we've been active in that field. Long-winded way of saying, wherever we feel there's an opportunity for us to use our product suite, that's where we focus on.
Thank you very much. We do have the representative of a smaller boutique bank. Iraklis, would you be so kind to give us your insight from the perspective of a smaller boutique bank?
Absolutely. I think I make a difference because ADP is much smaller than my fellow panelists. We entered this market about 4 years ago, slightly different than what you have seen recently from the bigger banks. We, as I mentioned also last year when I was here, we want to bring back a more traditional approach to shipping finance, which has come under attack and is still under attack, within brackets attack, mostly from a regulation perspective, but not only. Pretty much I would say the pressure that the banks are getting comes from the regulator of the banks, in our particular case the Dutch National Bank. And of course that has some spillover effects. So for us, what is especially crucial is that our clients that we like to team up with exhibit adaptability, and of course it goes without saying that they need to have the expertise, the track record, everything there. But I would say it's crucial as well to have adaptability to the various market circumstances, to be able to say, okay, sometimes maybe growth is not the best strategy for the near future, and maybe they should take a step back and change their fleet composition or renew the fleet or whatever is necessary. That's equally important to all the other aspects that, as I mentioned before, have been mentioned already, like the track record and the experience. Now for ATB, we don't have a specific preference on the structure or on whether it should be consolidated group or not. There are of course some minimum requirements that I think those have become norm, like the audit finance statements and stuff like that. I don't think there is a point to discuss those anymore, or having better shares or registered shares and stuff like that. So for us, there is not really a specific market or a sector or a client group size that we favor more. It's more, as I said, that we're looking for those elements that should be there, and then we'll be there to support those firms.
Thank you very much. That was most enlightening. We do have a representative of a Greek bank as well. I do hear assertions of the kind that Greek banks are more accommodating when it comes to their terms or their loan profiling. Is this an accurate statement, Eleni? Representing Piraeus Bank, which is one of the biggest systemic banks in Greece.
Sure. I'm not sure whether accommodating is a nice word or a bad word in the connotation. So whether
no connotation whatsoever.
Okay.
Being flexible and showing understanding about the business of the client.
I'd say there's one thing. I mean, Greek banks are very much driven by relationship as well as the rest of the banks operating in the sector. But I think what is the acute difference between a Greek and international bank is that for a Greek bank, it's unthinkable not to be invested in shipping. I mean, shipping is core to the Greek economy. It is it's the only sector globally where we command global leadership and supremacy. And as such, I mean, when I was asked, when I joined the bank about a year ago, my board asked me, how can a Greek bank be competitive in a market where international banks have lower cost of funding, lower cost of capital, etc. And I said exactly that it's not about being more competitive, it's about choosing the transactions and the relationships that you can offer, that little element of difference. So for instance, once we saw in 2019 that several international banks have retreated from shipping, from Greek shipping, and the overall financing participation percentage has reduced, the percentage where Greek and Cypriot banks lend to the sector has increased markedly. What this tells us is that, once the Greek banks had several challenges to address, like liquidity in the past years, like capital, once they have settled that, they basically decided that, it is fundamental to be exposed to the sector by choosing the right transactions. Now, whether that means that this is accommodating, I would disagree. I'd say that our approach is basically to sit down with the owner, discuss what is the optimal strategy in order to ensure that the loan is repaid, and be there a partner for the long run. Because the saying that I'm sure many of you have said in several discussions with lenders is that an umbrella is no use when there's sunshine outside. You need the umbrella when it's raining. And I think this is what the Greek banks have very much done so in 2016. And in the current crisis, where even though we might hope it's temporary, it still causes a lot of angst. So we're going to be here to stay, and I think the economy needs us because of the retreat of the international lenders. We felt a void, we filled up a void in the market.
Eleni, thank you very much. In this competitive market, how could a Greek bank compete? I set this question in light of the latest articles that I have read in respect of a collaboration between your bank and Oryx. How would that help Piraeus Bank, or your bank in particular, and how would that collaboration assist the shipping sector?
Sure.
Providing additional services, perhaps?
So the one thing I would say is that the natural positioning in the market for us is the mid-size owners, and because of the high cost of funding we have, higher than international banks, we concentrate on the ones that smaller fleets or older vessels, perhaps even scrap covered, but really people who really honor their investments and stay good, stay true to their promises. Now this strategic collaboration with Oryx, which is a very big group active in shipping for more than 50 years with over 100 billion balance sheet, is not there to provide us to substitute us as lender. Quite the contrary. We felt that there's a need in the market for us to be able to underwrite bigger transactions, perhaps, and also to offer access to financial solutions outside Greece. So, for instance, we're looking at leasing products that we can do, jointly. We're looking at underwriting jointly large transactions, in the sense that we need to ensure that our return on capital remains at satisfactory levels. Because let us not forget, as my colleague said before, the reason why several banks exited the sector was not because of the credit issues anymore, it's because of low profitability, low return on capital. So therefore, what we as a bank proactively have done is to try to find a partner that will allow us to turn our balance sheet in a way that will not compromise our ability to provide financing to our clients in the future and for bigger projects and more ambitious projects.
Thank you, Eleni. All the best with your new endeavors.
Thank you.
I would like to, moving on to the comment that Passchier made at the beginning in respect of the fact that you are trying to diversify the services being provided to your clients, mentioning the capital markets. I would like to touch base a little bit on the alternative means of financing, and I would like to get your insight as to how your bank sees its competition vis-a-vis alternative means of financing and how you position yourself so far and how you propose to do that in the future.
Sure. I think looking at just very simply the change of the lending mix in maritime land over the last decade, this used to be a sector dominated by traditional European shipping banks. I think we've moved away from that. I would say approximately 50-50 European traditional banks, the other 50% mostly coming from Asia, from new money providers. So then looking at the structures that we see, I think the first thing that comes to mind is Chinese leasing. Chinese leasing is an important product, and I think has helped, for example, last year, the tanker space tremendously in a situation where a lot of companies were focused on liquidity, couldn't find liquidity in the traditional bank market, went out and obtained Chinese leases, sometimes at more aggressive profiles, higher loan to values, and aggressive competitive pricing terms. So I think the traditional banks have lost a lot of the actual lending and balance sheet exposure to the Chinese leasing houses. Then there is direct lending. We've seen a lot of activity in the hedge fund space, CLO space. Some of the guys that we cover through our investment banking desk that have shown an appetite for shipping, but not necessarily on the equity side, more an appetite for direct lending transactions. And to be frank, I think we've really used that trend to diversify ourselves also away from putting buy and hold exposure onto our balance sheet directly, and rather arrange those types of financings for and on behalf of our clients. Chinese leasing structures can be very complicated. It's not really always an apples to apples comparison what you get from the leasing houses. So what we did last year, for example, is organize in Shanghai with a number of our global clients a conference where we actually invited the lessors, brought them over to a venue like this, and set them up with with the counterparties on a speed dating basis and introduce. So again, I think a long-winded way of saying while lending will remain and continues to be important for us as an institution, we also are quite agnostic right now in terms of what markets we execute in. We look across the capital structure, we advise our clients, and we will be there going forward to help the best solutions for the names that we cover.
Thank you very much. Iraklis, following up Passchier's response, what are the advantages of a bank like yours vis-a-vis an alternative means of financing? I think they're quite obvious, but I would like to get some insight from you as well.
I tend to say quite a few, but then I will probably upset Passchier, who is a good friend of me. So first of all, being a small bank, the situation is much more manageable. So wherever we would like to steer from one sector or another, because we see more opportunities from tankers versus dry bulk, then we can easily do that. That's an obvious advantage. For instance, at the moment, dry bulk is at the point which is very comparable to 2016, and for me that would have been one of the best moments to enter into a new transaction. And at the moment, I favor very much dry bulk transactions, as long as we share the same vision and strategy with our customers or partners, I should say. That's a more appropriate word to use. So again, small bank, we can take a more insightful view on a specific segment or particular client group that we would like to team up with, and structure a facility more to the needs that are required in a way because of the market, but also are sustainable in the medium to long term for us and of course our partners.
Thank you very much, Iraklis. George, in your introductory comment, you emphasized the issue of regulatory regime being imposed on you. Is it an accurate statement to say that it's becoming more and more cumbersome for someone like you to justify shipping internally or to promote shipping internally?
Okay. First of all, shipping as a percentage of our balance sheet, and I think of any bank's balance sheet, is not very big. It can be 1%, 2%, maybe 3-4%, maybe the group banks are an exception to that. But for international European banks, it's a relatively small amount. However, it needs to make sense because shipping has to compare on equal terms with all other businesses within the corporate bank. And that can be manufacturing, food and retail, financial institutions, any business, and the comparison is being done on the basis of the return on equity. And the return on equity needs to be above the threshold. And if it's not above the threshold for a prolonged period of time, then there is a problem. At the same time, shipping as a business faces a few challenges. And some of those challenges have to do with the perception of shipping. I mean, the high volatility is not a perception. Shipping is a high volatile business. We saw the Cape-size earnings dropping from 35 to 3.5 in 6 months' time. When a risk guy in Rotterdam, Hamburg, or London sees that, he's not happy at all. And vice versa, obviously. Also, it's a capital-intensive business. And the cross-sell is relatively limited compared to that of the other businesses. So you make money primarily by lending, especially in a market like in Greece. And then there is this perception about the intransparent nature of the shipping companies, and also another perception that the shipping community can do more on sustainability. Now, as you know, perception is not reality, and our job is to make sure that all these issues are being addressed. But you cannot address the issue of high losses, for example, because there it's numbers, and numbers speak for themselves, you know. So we need to have a profitable business, a sustainable business. And how do we achieve that? First, by pricing the loans in a way that reflects the associated risks. And there are risks in this business, as we all know. And secondly, by keeping the provisions and the impairments and the losses, whatever, you know, at a minimum level. Zero, if possible. Because if you look at the banking map today and compare it with how it looked like 15 years ago, we will notice that most of the traditional lenders at that time have exited or have recently announced that they will exit. And this is not good. It's not good for shipping, it's not good for the banks, and it's not good for the employees of the banks either. Okay. So the competition from China, as Passchier said, is very much welcomed, and we at AMRO, we encourage our clients to have a diverse capital base, because we think the trend is towards corporatization of shipping, and we want that to happen. When a door closes, another door opens. So a lot of banks left, others have entered the room. Apparently, they don't have any legacy portfolios, okay? So they start from a clean balance sheet. I think they are here to stay, and I think for the international traditional ship lending banks, this competition can only bring positive results.
Thank you very much, George. Talking about, and I would like that to be the last round of last comment, because I'm very conscious about the time. Talking about the more and more corporate outlook of shipping finance and banks which are active in shipping, would Katerina and Eleni give us?
We can have more lenders, including, let's say, green scrapping in their loan agreements, and I think at some point we may also reach non-financing, let's say, of coal for dry bulk carriers. We may even go there, as far as the environmental regulation is concerned. Now, as George very well described, banks, apart from the environmental focus, have these challenges from their own regulators, with their focus on their cost of capital, which is being increased all the time. And although I do find traditional banks as the main source of capital during the next 5 years, okay, some lenders leave, other lenders, Greek and Cypriot banks, go in aggressively. We have the alternative source of capital surrounding us. They have always been there, actually, for the last 20 years. It's not something new. But we as bankers have reached a point, and we are called to be creative and to find this sweet spot, let's say, in order to bring and generate returns for our shareholders above our hold rates, and at the same time not deteriorating the risk position of the bank. This is something very difficult and very challenging, and I just feel that I am very privileged to work in an organization which is active for 40 years uninterruptedly. We have this diversified portfolio which gives us this flexibility. This is where flexibility is hidden. And on the other hand, we have a very large spectrum of products that we can serve our more sophisticated clients. We also look at, let's say, leverage acquisition finance, M&As for the big ones. We have recently concluded a sophisticated structure in the trade finance area for a listed client of ours. We need to be more creative because the cost of funding is increasing, and we don't want traditional bank to exit shipping, especially if there is a bank with such a long history with no minimal losses, let's say.
Thank you very much, Katerina. Eleni.
It's very difficult not to be repetitive here, but I'd say one thing is that it's clear, one of the things I've learned, in my short tenure in shipping, is that it's very difficult to make predictions. And I'm sure, if you went 5 years back, no one would have expected where we are today. Equally, banking has been difficult to make predictions because if I was asked the same question in 2007, I think very few people would have predicted what happened from 2008 onwards. But there are clearly two trends that we cannot ignore. One thing is regulation, and again, I won't repeat what my colleagues here have said, which is spot on, and environmental, social, and governance responsibility. What I would say is that this is not just banks, responsibility here. We're partners, and one of the things that involves shipping is that this is a long-term partnership because you invite us to participate in projects that will take 15 years, 20 years to mature. I am sure most of you tend to be there for the long run. So therefore, in the terms of partnership, we want the owners' cooperation in trying to be active in the next day, as Katerina said. What this means is that you also need a profitable bank as your partner. So therefore, it is no use to fight about the 20 or 30 basis points, the difference in margin, because at the end of the day, this is an investment that will keep your bank, your partner, afloat for the next decade alongside your projects. And I'm sure many of you have found yourself in difficulty when significant lenders have decided to exit the market, and you were concerned as to how you would fill that gap. And it's not about the gap around shipping finance, so getting lending, but who will do your operations, who will send the payroll to your crews, who will do the ship closings, etc. So again, a big evolution in how ship closings are done these days, because of compliance regulation, not because of environmental or anything else. So what my plea is to you is that I don't think we need necessarily long loan agreements with Poseidon principles or all these things that, sorry for my legal colleagues here, but only make legal firms richer and happier. I think we need a joint understanding that we, both parties, will be here for the long run, and we can only make this if we both invest in this relationship. So that is probably where I want to close. I'd say, well, probably no. The last thing I'd like to say is that one of my clients said to me the other day that even when the world was destroyed, they were saved by a ship, and he was referring to Noah. So and it is true. I think in this a world where global trade is still done by shipping, by the overwhelming majority, you're here to stay, and we want to be with you in the next day.
Thank you very much, Eleni. With this positive comment, I think that I'm sure that Poseidon principles will occupy us for a considerable time. Would Passchier and George like to give their views or tell us what it applies within their own institutions? I know that TNP.
No, look, I think we are one of the signatory parties
Yes.
to the Poseidon Principles, and I think it is important to note that in the current environment, there's a lot of focus, as was pointed out by my colleagues here before, on ESG, and this is not just in the shipping space in general, and on the investor side for shipping. Also, as a banking institution, we are being asked these questions by our investors as well. So I think this is just the way the world is changing. We're accommodating, we're making some changes to report policy indeed that is already in place. Essentially what we're doing is we're tracking the overall trend as indicated by IMO by 2050 in terms of carbon emissions. We're tracking the trend on a portfolio basis. I think it's, again, it's important to note that this is a trend that will continue to impact the business. We have discussions around propulsion, how that is going to change the shipping business going forward. So being on the forefront on these types of themes in this environment, with as much scrutiny as we're getting from investors on this, is important to sustain yourself.
When it comes to who's gonna take the bill for this, I'm sure that everybody knows the answer.
The end consumer. At the end of
Yes.
the day, it's the end consumers with everything that goes on
Yes.
with regulation.
George?
Covered by my colleagues. A few things about ABN AMRO. We have been in this business for many years. We think that it's in our DNA to be in shipping. I'm not saying we are the smartest guys. I'm not saying we are the cheapest bank. I'm not saying we are the most aggressive bank either. But I can confirm that we are going to be around today and tomorrow.
Thank you very much, George. Any concluding?
No, just on the Poseidon principles, because also ATB is a signatory. If it wasn't the Poseidon principles, it would have been the regulator stepping in and doing something much worse. Simple as that. When DNB, the Dutch National Bank, not anything else, asked us, what have you done about the environment with respect to shipping finance? And our initial response was nothing. They said, okay, why are you in this business? Maybe you should revise. But we said we have no losses. Actually, our return on equity, as George said, is healthy. It's sustainable. Yeah, okay, fine. There are other businesses as well, so you can do something else. So again, on the Poseidon principles, if it wasn't this small first step, which is far from ideal, the last thing I want is suddenly to become an expert on, this environmental. I like that from a theoretical point of view, but assessing it on my day-to-day job and discussing propulsion more as a matter of need rather as a matter of educating myself about this topic, that's something to know.
Katerina?
Yeah, just to say that HSBC is not the signatory as of yet, but we're looking closely into it, so I believe that we will soon be one of the signatories. And on our presence in the local community, we are used to work counter-cyclically, so we think that this is the time to invest more in shipping.
Last but not least, Eleni?
So I'd say that Piraeus Bank, sorry, I get this wrong all the time. So Piraeus Bank is not a signatory to the Poseidon Principles. However, we're one of the founding members and the initial signatories of the United Nations Principles for Responsible Banking, which includes environmental and social and governance responsibility. That is 35 banks across the world. So we see this across sectors as a very important theme in our business. Now, having said that, because I'm probably the only one among our colleagues that look outside shipping, I'd say that, yes, there is this scrutiny around shipping, but, let us be frank, it's not just shipping that is the largest polluter, around, the industries. I mean, we finance aircrafts, we finance, lignite, we finance cones. It's not just that, we mentioned about, will we have appetite as banks to finance the transportation of coal? But if you think about that, even if you go fully electrical, someone needs to provide the power. And the renewable source of energy, they're insufficient to provide power. So until we move into a fully green environment, I think we need sense to prevail. Because as we said, at the end of the day, we need to continue operating smoothly, and we need to ensure that the end consumer is also not paying, the bill, or the ship owners do not pay the bill against, other industries that, should be taking part of this as part of the social and environmental responsibility as well.
With this fair comment, we conclude today's panel. Any questions from the audience? Feel free to ask any questions since we have such a good panel here. I think all the questions have been answered. That's my assumption. Thank you very much, everybody.